What's up? What's up? What's up? Let's talk about the market. All right, guys, what's going on? What's going on? I got a lot of emails this week. Let's turn this music down. I got a lot of emails this week regarding the market, and portfolios are getting smashed right now. And you should be concerned at what's going on. So we're going to look at the broad market. For you newbies, we measure how the market is doing by looking at the Dow Industrial Average, the S&P 500, or the Nasdaq. So if you have a smartphone or if you watch CNBC, you definitely want to watch those different. You definitely want to watch the Dow, the S&P 500, or the Nasdaq. You can actually trade the S&P, the Nasdaq, and the Dow Jones in stock form. The Dow is called the Diamonds, which is the DIA. You can trade the S&P 500s by buying the Spiders, which is the SPY. And you can buy the Nasdaq by buying the Qs, the triple Qs. You can also day trade the different indices. You can day trade the S&P 500 futures by following the ES, which we have here. You can also day trade the Nasdaq, which is the NQs, and you can also trade the mini Dow, which is what I love to trade, day trade during the day, and that's the YM. We're going to look at all three charts and compare them and see exactly what's going on with the market. So let's start out with the S&P 500. Most investors use the S&P 500 to gauge where we're at. And depending on where the S&P 500, well, whatever the S&P 500 is doing determines when they want to buy and sell stock. So for you newbies or you advanced traders, you definitely want to have, this is a day chart, 5-year day chart, and we're looking at the S&P 500, the ESs. And you want to have these three moving averages on your charts. You want to have the 200-day moving average, which is this blue line, the 50-day moving average, and the 20-day moving average. All right, if you don't understand what you're looking at this particular time, you can go to my website at whatwouldjoeldo.com. The first thing you want to learn is how to read candlestick charts. You have to learn how to read candlestick charts or charts in general if you want to be able to trade on the stock market or understand. You can buy and sell stock at any particular time, but if you want to become an advanced trader, you definitely want to learn how to read charts. They're very simple. I have a video there, I think it's like 5 or 10 minutes long. Lets you know the basics of reading charts, but let's get to it. All right, so we have our moving averages here. We have the 20, the 50, and the 200. The 200 is the strongest, the 50 is the second strongest, and the 20 is the third. Right now, reading from left to right, it looks like the S&P 500 looks like we ran into this 20-day moving average. If you notice here, I have a trend line. So what stocks usually like to do is they like to hit these trend lines, and this trend line right here is resistance. So until we break through this trend line, we're going to keep falling. So we fail, we fail, we fail, we fail. We finally broke that trend. We broke this trend line. We started to go up. All right, as we go up, stocks tend to come down in a stair-step fashion, and it likes to go up in a stair-step fashion. So as it's going up, it usually goes up along a channel. And if you notice here, anytime you break the channel, we usually change trends. So there was a channel here. Let me show you. This won't be accurate, but looks like we had a channel. Looks like we had a channel here. And as you notice, we dropped down to the bottom, up, down to the bottom, up. And then as we change trend, and if you notice here, this is a hammer. Usually when you see a hammer, the trend changes. We got a hammer here. We got a hammer at the 2015 lows. So we hit support. We started to rise up. And it looks like we were staying within the channel. And then yesterday, we closed beneath this channel for the first time, which is making a lot of people panic. We did get a red arrow here, which means stocks should be going down. Now, how far do I think we'll go down? Well, these were the 2015 lows, which was here that we treated as support. Support is usually the lowest that you think a stock can go. So we broke support January the 20th, and people panicked. But then we started to rally and go up, and we hit this 20-day moving average. Now, what I thought was going to happen was we were going to sit at the 20-day for a while, and then we were going to rise all the way up to the 200-day moving average. Well, we got another hammer here, which was good, but we couldn't stay within this channel. So once we broke this channel, now this becomes resistance and this becomes support. So how far do I think we'll fall? I think we're going to fall at least to this point. But because this was the low, I'm thinking maybe the low, if you look here, it'll tell you the low if you put the arrow on the candlestick. Looks like the low is 1804.25. So what I would do is I would set an alert for yourself. Let me show you how to do an alert. All right, create alert, single alert. We're going to set an alert below. I forgot what that value was. Let's go back. That value was 1804.25. So we're going to set an alert at 1804.25 at or below 1804.25. All right. Why did we say at or below? Well, we're already above it, so we want it, once it triggers the 1804.25 or it goes through it, you're going to get an alert. Well, I'm going to get an alert. I'm going to get an email, and I'm going to be notified by a sound. So I create that alert. You see this arrow here, and that lets me know that we are at the low. So there's two things that you can do. You can either buy stock at that point if you believe that we're going to break back and go back to the upside, or you can start selling some of your stock. Now, we're not that far away. I mean, it is another 70 points on the S&P 500, which is dramatic, but it's not catastrophic. So if we reach that particular level, I will probably sell another, because I'm going to probably on Monday, if we don't break up into this channel, I'll probably sell about 20% of my portfolio. If we get down to this level, I will probably sell another 30%. So I will be 50% in cash. What does that mean? That means I'll have, let's say I had $10,000, I'll have $5,000 invested in stock, and I'll leave the other $5,000 available just in case we fall. Now, if we break back above this line, I'll buy the stocks that I sold off, I'll buy them back. And as long as we stay above this line, I will continue to stay long. As long as we're beneath this line, I'm going to short. And we can actually drop a pretty, I mean, we have a lot of room to fall, but I don't want to show how far we can fall at this particular point. I want to remain positive and hope that we can stay above this particular level. If we do, I will definitely show another chart. But let's look at the Dow Industrial Average and see what it's doing. All right, if you notice, the Dow Industrial Average, the low in August was right around this point. This value, which was 15,365. Now, we're still in the channel on the Dow Industrial Average. So the Dow Industrial Average looks pretty good, but remember I told you investors use the S&P 500 to gauge when they want to buy and sell stocks. So because the S&P 500 has broken this channel already, we're pretty bearish right now, even though the Dow is within the particular channel. So if you're just looking at the Dow, you don't realize that, hey, maybe you should be selling stock. So that's why you need to look at all three on a daily basis. All right, you can go back and figure out what stocks make up the Dow Jones Industrial Average and which stocks make up the S&P 500, but the S&P 500 is a little bit more balanced. It pretty much has the 500 most profitable companies in America in that particular ETF. So the YM again, if you are trading the YM, you can buy at this bottom. I know people that buy at the bottom of the channels and they hold until they get to the top of the channels. How much money can you make? Well, if you were trading the YMs and you bought at this bottom of the channel, which was right around 15,875, let's say we get to this point, and let's round it up, 15,875. Let's say you get to 16,875. 16,875. That's 1,000 points. So 1,000 points would be 1,000 times 5. That's about $5,000. So if you were using $4,200 and you won 1,000 points and it's $5 a point, that's $5,000. That's over 100% return riding from one channel to the other. So I said 1,000%. I meant 100% return. So 100% return is huge in in any market that you're in. Anytime you can return 100% of your investment, it's a pretty big deal. Just understand when you're buying CDs or bonds, you might make 7% in a year, over a 12-month period, but you can make 100% in the matter. Remember, these are day charts. So you can make 100% return in, a couple of days. You do that over and over again, you can turn over, 4,000 or 5,000 to $1 million quickly. If you don't believe me, do the numbers. But that's the YM. Let's look at the, I promised to look at the Nasdaq. So let's look at the Nasdaq. The Nasdaq is pretty much your tech sector, your tech stocks, Apple, eBay, Amazon, Netflix. And if you notice, the Nasdaq has been getting punished. So the Nasdaq broke the channel 3 days ago. And it looks like we're falling. We have an arrow here. We're falling. We look like we went up to the 20-day moving average and we are falling. So how far do I think we will fall? We'll probably fall all the way to at least the 2015 lows. Right now we're not quite there yet, but looks like 39.83.85. Looks like by Monday we should be at the January lows, and if we get to the 2015 lows, it's going to be a problem if we break this line. So I'm going to put another alert right here at 39.08.25. 39.08.25. I'm getting old, so I have to repeat stuff over and over again. 39.08.25. Remember, at or below. So I'm going to create that alert. And hopefully when I get these particular alerts, it'll let me know if I should be buying stock, which I will probably do for maybe a day or two. And if we break and we close beneath this line, then I'll definitely sell the other 20 or 30% of my portfolio. So that's what Joel would do when looking at these particular charts. Remember, again, if you don't understand what you're looking at, these are moving averages, 200-day, 50-day, 20-day. These are trend lines. What's a trend line? Well, a trend line is just a trend. Right now, the trend has been down. So once we closed beneath this 200-day moving average, the market became bearish. Until we get above this 200-day moving average, the global market right now is just it's very pessimistic right now. Until we get above this 200-day moving average, you should be shorting into rallies. So what does that mean? That means when we pop up to one of these lines, you should be selling once we get to one of these averages. And until we get above these averages, if we get above this 200-day, then you can start holding your stock again. But for now, you need to be swing trading. I didn't say you shouldn't be buying long. You can still buy long and catch quick rallies. But you need to sell into strength. Sell when the market pops. When the market pops up and your stock is up 10, 15, 20%, sell it. Once we get above this 200-day moving average, that's when you should be holding all of your stock. So that's what Joel would do. And if, like I said before, if you're confused at what you're looking at right now, you can go to my website at whatwouldjoeldo.com. There are videos there for beginning and advanced traders. And hopefully I answered all of you guys' questions this week. But you should be in panic mode right now because we did break the channel. We did break the channel on the Nasdaq and the S&P 500. The YM, I guess we'll probably, or the Dow will probably break that channel sometime on Monday or Tuesday. And I'll be watching the market closely. So, all right, guys, do your homework, look at your charts, enjoy the Super Bowl, and I am out.